Hey everyone, welcome to another market review. And we had a rally yesterday, slightly down on futures today, but not that relevant. And we have Easter weekend, a 3-day weekend. Expectation is that there will be boots on the ground this weekend. I disagree, and given how the market closed yesterday and behaved yesterday, I think the market disagrees as well. And the main reason is because it's Easter weekend. As we have all learned over the past couple of weeks and months, the world isn't what we thought it was, or at least it's not what I thought it was. Meaning a modern world where people don't believe in fairy tales and they are at least relatively rational. But it seems that it is not the case. We live in a very eschatological world and a very religious world. Some Somehow we ended up led by religious fanatics in the U.S. and Israel, and we're seeing the consequences of that now. And I'm basing my take that there will not be boots on the ground this weekend, partly on that assumption, in that any Christian person would not want to do war over Easter weekend. Uh, and if that is not the case, it's a very negative thing for the entire world because it kind of means that the US leadership is in a death cult, basically. The only logical or not logical, the only thing that makes sense is that they're basically apocalyptic death cult, and they somehow think doing this over the Easter weekend will bring Jesus back sooner or something stupid like that. Like it's fucking crazy that we're at this point. I cannot even believe I'm talking about this shit. But going back to our stuff, so no boots on the ground. The market believes that as well because this very nice bullish candle we got here. What was the volume? I didn't check. And on good volume, so pretty good setup here. Now, as to the Iran situation, first I'm gonna talk about the U.S. side. So as you guys probably know as well that Trump is dumping in the polls and at all-time low approval rating. Then we have all the former MAGA influencers like I don't know Tucker Carlson, Candace Owens, who else? Alex Jones, Megyn Kelly, Nick Fuentes. Everyone is basically against the war. The U.S. has basically split into, or the conservative side has split into pro-Israel MAGA with Levin, Loomer, Trump as well, obviously, and some other I don't know what's the guy's name, Shapiro and whatnot. So we have the Jewish side, which is pro-Israel and pro-war, and we have the former MAGA influencers, which are now anti-Israel and are going anti-Israel hard. Basically, the U.S. is in a sort of a Cold War with pro and anti-Israel positions. And I think this is going to escalate more and more over the next couple of years, not necessarily now, because I my prediction on that end is that in 2028 we're gonna have a third party candidate. Uh, as of now, I think is going to be Joe Kent because he's very presentable. He's a pretty boy. He talks nicely. He has the background and everything. And I think he's being prepped to become the presidential candidate from the anti-Israel side. But it's very early, just speculation here, nothing really serious, so don't take it too seriously. Um, and but I think 2028 is going to be the first time in U.S. history, basically, in which the third party takes a significant seat in Congress, maybe like 20%, and there's potential for a third party candidate to actually win the presidency because there's basically no one on the conservative side, on the Trump side, that is a good candidate right now. Democrats are in shambles anyway. They're pretty bad at this as well, and there's a lot of pro-Israel in the Democrat side as well. So I think 2028 is going to be when we see the consequences of this U.S. Cold War between the pro and anti-Israel sides. We might see a brief spike in independent third party during the midterms as well. but it seems doubtful. It's too short notice, and I don't think that they have the time and the resources to pull it off. But my expectation is 2028 is going to be something historic for the US, and maybe the US actually discovers democracy. They move away from the two-party system and actually discover democracy, because the two-party system is not democracy. It's just, I don't know. It's the uni-party basically. Now, coming back to Iran. So Trump did the stupid thing and invaded Iran, and it's quite possible he does the stupid thing and leaves Iran as well. Why I say stupid is because, mm, having started this, it's basically impossible to leave. The consequences of leaving are way, way, way too there for the US to tolerate. And even if they leave, like we are very close to the deadline where Trump set on no energy attacks, which is Monday. And then he said another 2 to 3 weeks of intense bombing, let's say until the 24th. And let's assume the US leaves. US leaving the Middle East is basically de facto leaving Iran as the dominant power in this region. And aside from imposing tolls on the Strait of Hormuz, that is the least of our problems. That's basically nothing. Uh, but the problem is the influence it will have over Saudi Arabia and the UAE, uh, over all countries in the region, obviously. But these are the two US surrogates that will like it the least, especially Saudi Arabia, because they hate Iran, Iran hates them. Nothing will come out of it. But the problem is, basically, the monetary tolls of passing through the strait are nothing. Those are basically irrelevant. The problem is the political influence that they will have through the strait. Meaning, let's say Saudi Arabia wants to have a policy. Well, basically, moving forward, any policy they want to impose, they have to consult with Iran first. If Iran doesn't give the go ahead, they have the ability to say any ship that goes to Saudi Arabia cannot pass the Strait of Hormuz. So the leverage that the strait will offer them once they militarize it and leverage it is basically unbearable for Saudi Arabia or UAE. They basically have to, instead of becoming US vassal states, they will de facto become Iran vassal states, and they cannot allow that, or they will not allow that for a long time. Like I said, maybe Trump is to be enough to leave, and that's a possibility. But I'm pretty sure in 3 to 6 months, the US will be coming back, because what's gonna be Iran's main request? Most likely, it will be that the money that the UAE and Saudi Arabia were investing in the US now moves to be invested in Iran. They need it for reconstruction. They need it for whatever the hell they want, and most likely that's going to be the main request. And again, Saudi Arabia would not like that. UAE will not like that. The US will not like that. And at some point, anything that Iran wants will be able to be leveraged against those two countries, especially by using the Strait of Hormuz. So this is a situation where the US loses Arab money that is being invested in the US. Though that money won't go in the stock market anymore, maybe they actually pull some money because they need to do reconstruction on their own as well, and Iran will demand some investments as well. So the US cannot tolerate for that, and most likely, like I said, within 3 to 6 months, they will be back and bombing Iran and escalating the war. Furthermore, I do think we get boots on the ground probably next week. If that happens, a lot of US soldiers will die. It cannot end well for them in any circumstance, but that might increase favorability towards the Iran war in the US, because once you start losing soldiers, uh, people get into that sunk cost fallacy kind of mindset, and they want retribution, they want revenge as well, and the narrative shifts a bit, and it might become more positive towards the war. But like I said, was stupid enough to go in. Now he is likely stupid enough to go out, and the consequences of going out will be very negative for the US and the region in general. And I don't think the US will tolerate that kind of disruption on their end, and they will be back. Okay, so that's the whole setup for the Middle East and for the US. Now let's go back to markets. Uh, First of all, yesterday was the first time that this felt like a bear market rally. This was a reflexive bounce, doesn't really matter that much. The continuation was continuation, but yesterday we went down and recovered in spite of bad news and closed very strongly, made a very nice hammer candle here. We closed just at the trend line breakout. My prediction from yesterday was what? That inverted head and shoulders thing. Where's my post? Ah, this one. So basically, this we did this, but we did it in a single day, kind of the inverted head and shoulders. And now we are here. I thought that the next time we get to this level, we would break out. And I'm assuming that if we do not get boots on the ground over the weekend, we will gap up on Monday and we will move higher and break out and continue the bear market rally. And why I say this is the first time it felt like a bear market rally is because it made absolutely no sense for it to happen. Like bear market rallies are completely irrational. Everyone will complain about why the fuck is the market going up? Nothing makes sense. Like I want that sentiment. I want people to say like, how the fuck is the market going up when oil spiked 11% in a single day? What's this one was 15%. So again, one of the very large moves that we don't see very often. So the fact that we got this type of rally and people are saying what the fuck is the perfect sentiment to continue the bear market rally. And I think we go much higher. Usually on the first pullback, I'm going to enable moving averages. I'm going to turn off the ribbon. These are the moving averages. Orange is the 200 MA, purple is 100, and blue is 50, and green is 20. And on the first major bounce after going to the 200, we usually go back above as well. Um, like for example, let's go to the 2001. So pullback went above, and then on the second one we stop exactly at the 200 MA, and that also happened in 2002, 2022. Sorry. So first major bounce we go above. Second bounce we go and we stop exactly at this. So this is kind of the setup I expect here as well. Basically, we continue going up. We go to like to the max possible level, which is like 684-ish, something like this. Then we go back down, we go lower, we make new lows, and then this will probably turn. Let me try to do much, something like this. And eventually we will have a bear market rally and we go something like this. And maybe then we make a bottom, maybe we go lower, we'll see. But yeah, something like this should be the outcome. So again, if we don't get boots on the ground this weekend, I think the bear market rally continues. From what I've seen in flow, it's also suggesting that we continue. And I saw a lot of flow for May that was positive, for May 15th, which makes me believe that April is going to be a green month. Like I said, I like the way people are very against this and are complaining that the market is not going lower or calling the market stupid. This is a very good thing and suggests that the market will continue going up. Uh, and yeah, this is kind of it. I'll go to SPY to showcase this. Okay, so we bounced already, so we already at the trend line. Most likely we will continue going up, and my target is this area here. At the minimum would be like this open, the yearly open. So that's kind of the whole setup. Let me turn this off. So that's kind of the whole setup. I think we will go as high as this area here. And aside from this, I made the ball call that we are at the cycle top in semis. So let me show you some stuff here with how semis look like right now. And we have NVIDIA. and we have a breakdown below this level, recovered a bit, but again, not looking very good as well. Nothing really scary for it quite yet, but MU, we have this clear distribution pattern here. It dropped like 30% in a single week, or in 2 weeks, sorry, and now it's bouncing. But this has become resistance, and I'll like look at gold the way the same thing happened, and we got this an area, a sideways area with a lot of high prints, and they almost are always resistance when we get to this point. Like for example, this is Cree, but it happened on the low, so this is a bullish signal. And once it gets out of this area, it goes up and doesn't look back. But now on MU, we have this on the upper side. We have on SNDK kind of the same thing, even though this one has shown more relative strength. Then we have the other random semi names that are pumping. These are the names that have been pumping. So it's MU, INTC, SNDK, Dell, STX, Western Digital, a few of the names, a few of the consumer staples, and then we have energy, and that's kind of it. This and a few of the healthcare names. But this is the year-to-date chart, and in spite of semis and not semis, instead of Mac 7 going down, is software going down, banks going down, the market has held up. But this is late cycle kind of behavior, and I think it's very likely that we are making this is a distribution, and it's being sold into by smart money. AAOI, same kind of pattern of distribution. AXTY, same kind of pattern. Broadcom looks like Nvidia and went below support here. AMD, kind of same kind of pattern in this distribution range here, and AMD also had a short call a couple of days ago. This one. So basically, we had 185 short call, which was closed, and then a new one was open here. This went up short term, but it doesn't really matter. I'm pretty sure this will turn negative at some point. We had, then we do Ternium. Doesn't show high prints yet, but it's the same pattern of going sideways. E South Korea ETF looks like gold and silver if you remember. Then we have Lam Research, again same pattern, no distribution yet. Amat, same pattern, some high prints here, like the number one print here, number seven print here. Clock, same behavior, number one here, but it's going sideways. SAML looks like Nvidia. Intel, sideways looking, no high prints. It doesn't have anything. Then for the memory stack, Western Digital, as you can see, there's a lot of high prints and again going sideways. STX, same kind of look on a single high print. Then we have the adjacent stack as well, like GEV, which benefits from power generation, looking very quite toppy as well. I'll show it like this, and this is third leg up after a huge run with a very large bearish divergence here, and this is going to look like a rising wedge. Sort of like this. This will almost 100% retest the AVO up from the IPO, which is probably going to be something around here by the time it meets it. So I'm showing this just to show the names that have outperformed, like CAT. CAT also stopped going up and is going to go sideways. DE, kind of the same thing. Walmart, same thing, has been a top performer, but no longer looking like it. Costco, we had this high print here that was a good signal of going long, but it's still in distribution, is going sideways. And the Lockheed Martin, same thing, like it kind of topped out, it will likely go sideways here. Johnson & Johnson, again, had a huge run from 160 to 243. and now it's topping out, had a high print of number 4, and most likely will go sideways until it eventually breaks down. Then we have banks. Number 1 print for JPM was the top. Looks very much like Nvidia, surprisingly, and again we haven't really gone up, and most likely this will be a sideways consolidation. Citi, same thing. Goldman Sachs, same thing. XLF, it will be same thing, but the point is I don't think we go higher. So at best we are range bound going sideways. At worst, this is going to be a cycle top, and the way things will play out eventually. Let's look at Apple and let's add Nvidia. Let's add Meta, Tesla, and I'm gonna add Palantir for the sake of it. Uh, I'll make the point at some point when I get to it. Oops. Palantir, pin to new rise scale. Okay, and what I want to look at is actually 2022. And this is Palantir. Uh, it was a market darling at the IPO, and then it was the first to top out. And this is names like Neo as well, that they were the 2021 darlings, like Zoom, stuff like that. The pandemic darlings were the first to top out, and then they went down. Then the next to top out, which one was it? Maybe Meta and Meta. Meta was the second name from this to top out, and then it went down. As you can see, the green line is Meta. It went down and just was in a bear market. Then the rest of them kind of topped out slowly but surely. What's purple? Purple is Tesla. The Tesla topped out and it did a top retest, but then went down and down and down. Then it was, what was it? This is Nvidia, topped out, and the final one to top out was Apple. But once this sideways type of consolidation began, it was just a matter of time until we got the true bear market collapse that eventually came. And it's one at a time. Now we have FANG names all looking quite bad and clear tops for everything. Uh, Even Apple, Microsoft, we know it's down 40%, 20%. Meta, Nvidia is joining the party soon, and all of those names that are the like light, like this type of names that are like GEV, which have been the beneficiaries of the AI bubble, but sort of like stealth names, SNDK, are going to be the last ones to fall. But when they fall, they will fall a lot because they've been pumped like crazy, and what goes up that much will fall just as quickly and will fall even more quickly, and it will fall a lot when it does. So this is not going to be like a 20% correction like it is here. This is a huge range. 50%. When it actually drops, it's going to be look more like SMCY when they drop. So basically this mega pump, and when they drop, they're going to go back to this consolidation here, something like this. In SNDK's case, probably somewhere around like 200. So quite a lot to go down, and we see signs of this already. Like we saw the news on OpenAI. There were a couple of negative news, like for example the ad attempt didn't really go that well. They tried to sell some stocks for 600 billion and didn't find a buyer. They cut Sora and all the news that we've seen from OpenAI over the past couple of months. So it's not looking quite good for the whole AI stack. My expectation is that we will continue the bear market rally. We will go to, and these names will continue outperforming for a while more. We get to that area here, like 680, 284, something like this. Maybe if we get peace, even go to like make a new all-time high at 703, just barely. I don't think we get a completely new one. Like we will just go to the top of the broadening formation. But then that's kind of it. Then the true bear market begins, and everything basically drops. But other things that I think are kind of suggesting that the bull market, no, the bear market rally continues are stuff like Hood. Like this setup is quite bullish, and we have a huge divergence. I saw some flow on it as well. It's looking quite good for a bounce here. We are at the previous all-time high and breakout. Very likely that this will be a support. And what I expect next week is for this rally to broaden instead of dumping. Same stuff, and there are a lot of charts that look like this. This is Oracle. It's not that big of a divergence as with Hood, but it looks quite good as well. Microsoft continues to look similar um, with this, like this. Still quite a big divergence, even though the angle here is not that steep. So there are a lot of names that could potentially recover a bit. These names should slow up just a bit, not that much. They should continue going up for the short term, but eventually we will get that bigger rally, and it will reset everything, and everything can drop again. So this is kind of the whole setup right now. I think the bear market continues, and we should be breaking out. Everyone will cry that why are we breaking out? It makes no sense. Maybe oil even collapses. Again, I think this was a spike in anticipation of boots on the ground this weekend. If this does not realize, we should be seeing a pullback in oil prices, at least go back to 100 or something like this. But yeah, this is kind of the whole setup, and that's kind of it. Hope it helps. Have a good one. Bye bye.